Imagine you're standing in line at a coffee shop, and the person in front of you casually mentions that they just made a small fortune investing in a new tech stock. It's tempting, isn't it? You start wondering if you should jump into the stock market or maybe explore other investment opportunities you've been hearing about. But then that familiar feeling creeps in, the uncertainty, the trepidation, leaving you stuck in a loop of indecision. Making financial decisions, especially when it comes to investing, can feel like standing at a crossroads where each path is shrouded in fog. But what if I told you that understanding and decoding your decision-making process is like having a flashlight to cut through that fog? Let's shine some light on how we make these critical financial decisions. At the heart of decision-making is a mix of intuition, emotion, and logic. It's a bit like cooking a perfect stew. Too much of one ingredient and the balance is off. Intuition often leads the way. It's that gut feeling that tells you whether something is right or wrong. It's like a seasoned chef who knows just how much salt to add without measuring. But in investing, relying solely on intuition is risky. It can be influenced by biases, like the excitement of market hype or the fear of missing out, which often leads to impulsive decisions. That's where emotion steps in. And oh, what a roller coaster it can be. Fear and greed are two powerful forces that drive financial markets and our decision-making. Fear is that relentless guardian warning you of potential loss, whispering that you might lose everything you've worked for. Greed, on the other hand, is the siren of opportunity, luring you with the possibility of getting rich quick. Both can cloud judgment, but understanding their impact is key. It's like knowing the weather before setting sail. You wouldn't venture into a storm without a plan, so why invest without understanding your emotional weather? To balance intuition and emotion, we turn to logic. Logic is our anchor, the checklist that keeps us grounded. In finance, this means doing your homework, understanding what you're investing in, knowing the risks, and having a clear goal. Think of logic as the map on your journey. It doesn't eliminate the uncertainty, but it ensures you're heading in the right direction. But how do we ensure this map is accurate? Through mental models, those frameworks that help simplify complex problems. One powerful model is opportunity cost. Every dollar you invest is a dollar not spent elsewhere. It's like choosing between two roads on a hike. You can't walk both at the same time. Understanding opportunity cost helps prioritize where your money should go to align with your long-term goals. Another helpful model is margin of safety, a concept from value investing. Imagine buying a house. You'd want to pay less than it's worth to ensure a good deal even if the market dips. This model teaches us to invest with a buffer to protect against the market's ups and downs. While these models guide us, self-awareness of our financial habits and psychological biases is crucial. Humans aren't always rational, especially with money. We might overestimate our knowledge or follow the crowd because everyone else seems to be making money. This is known as herd mentality, and it can lead to buying at market highs or selling at market lows. Recognizing these tendencies helps us pause, reflect, and choose more wisely. Long-term wealth building often requires resisting short-term temptations. It's about planting seeds for a future you can grow into, rather than quickly grabbing the low-hanging fruit. This doesn't mean avoiding risk altogether, but rather managing it with patience and discipline. Imagine wealth as a garden. With time, care, and the right conditions, it flourishes. Reflecting on personal financial journeys provides deep insights. Remember a financial decision you made that didn't go as planned. What drove that choice? Was it a lack of information, emotional pressure, or perhaps a sudden market trend? Analyzing past decisions helps refine our future judgment. It's like reviewing game footage after a match. Seeing where things went well and where they went awry sharpens your skills for next time. In the end, financial decision-making is about more than numbers. It's understanding yourself, the market, and finding that sweet spot where intuition, emotion, and logic coexist. It's not about eliminating risk, but accepting it as a part of the journey, a dance rather than a battle. And just like dancing, the more you practice, the more confident you become. As we wrap up, let this idea linger. Investing is as much about personal growth as it is about financial gain. Every decision is a learning opportunity, a chance to better navigate the complex yet rewarding landscape of finance. So, next time you stand at the crossroads of a financial decision, take a moment, breathe, and remember the flashlight you now hold to guide your way.